Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. There's lots that we have to track for you in terms of the queries that have come through. We are going to answer all of those, but first up, a quick look at the markets. It has been quite a weak day, there's no great move either side, but we have been trading in quite a thin band. Right now it's just around a 30-point cut that we are seeing on the Nifty. The Nifty bank has moved into the green as we speak, but we have been seeing that move between the red and green pretty much through the day. On the frontline index, we're currently at 17,483, so not too far away at all from that budget day low that we've been talking about of 16,533 around. So that is something important to watch. We're not too far from those levels at all. So let's actually invite our guests and we can get in a call in the market as well. We have Rajat Bose joining us as well as Vijay Chopra from Enoch Ventures. Gentlemen, good morning and thanks for joining us. Vijay will be with us in just a bit, but Rajat, first up, if I can just get your call on the market. Like I was pointing out, this entire week has been quite weak, right? Around 2.5% gone on the Nifty. Do you think this kind of tight band is likely to sustain? Do you think that budget day low will be tested as well?
Mitra, good afternoon and thanks for having me. What I would say is this, that today is the second consecutive day that the index is actually trading below the 200 exponential moving average, which is at 17,590. And if it were to sustain in this manner and the kind of selling that we see, then definitely the budget day low might well be tested. And in fact, it could even go lower. But for a recovery, at least it should move beyond the 17,600 level and sustain there. A strong close above that might signal that the range-bound activity might continue. Otherwise, there is every possibility that we might see and retest that budget day low.
Okay, all right. That is the call on the market. The budget day low that we've been talking about is around 120 points away right now, so not too much at all. But let's actually get to our queries now. Vijay Chopra also joins us, so we have both of our guests ready to answer all of your queries. Rohin Malhotra writes to us from Mumbai. He says he has 50 shares of Happiest Minds that he bought at 540. He's been holding since 2021, and he now wants to know whether he should continue to hold on to this investment, should he get out, what he should do with this. Happiest Minds, let me come to you first on this, Rajat. It's not done very well. Actually, for the year, it's down around 10%. How do you look at this?
Well, at the moment, it looks weak, but I would suggest the investor not to exit till such time it falls below 825 on closing price basis. Otherwise, if there is a better opportunity that he or she might think of, then definitely the investor can switch. But technically, it becomes a sell only when 825 is taken out decisively.
Okay, that is on Happiest Minds. Vijay, thanks for joining us. I also want to get your thoughts in, in fact, we were talking to the management just yesterday. They have made an acquisition, right, of that Sri Mokambika in the healthcare space. And they sound very optimistic on their overall performance as well. They're saying that they will beat their EBITDA margin guidance. Do you think this is a good one to hold?
Well, I think yes, but I would say that exit on rallies should be the call. And as Rajat has suggested, that we should keep a stop loss of 825. Otherwise, you'll lose all the profits, whatever you have made over the period of a few years. So IT definitely is challenging because we're not seeing any green shoots in the Western world. Look at US or, European countries, and we are still to hear good news from these countries. So I think that if at all you want to be in the IT space, be with the top ranked companies. I think that TCS, Infi give a better opportunity than Happiest Minds. It's always better to be with the top ranked companies whenever there's a downturn because they recoup faster because they have a lot of cushion behind them. So I would recommend exit on rallies if you get a rally, or if the stop loss gets hit, you should get into some strong fundamentally top companies like TCS and Infi.
All right, maybe stick with the large cap IT names. That is the call coming in. But with that, let's move on to our next query. This one comes in from Mahesh Tardal, who writes to us from Bengaluru. He holds 1,425 shares of Tata Motors, which he bought at 401, and 1,800 shares of BPCL, which he bought at 354. He wants to know what he should do with both of these investments. There you have it on your screen. He is sitting on a loss. This one is for BPCL, the screen that you can see right now. So let's, Vijay, let me come to you first on this. He's saying Tata Motors as well as BPCL. He is, making a little bit of a profit on Tata Motors, but the stock has not done too much. Do you think that this is a good one to hold? And within the auto space, do you think there's perhaps, better opportunity elsewhere?
I think that, and I've spoken earlier also, that Tata Motors is one of the best players today in the auto space in India because they have global brands, number one. Secondly, they have revamped their entire, product structure and product offering for India. They are also raising capital. So it was there in news, I think, a couple of days back that they are also raising capital, which would help them to do further expansion. And mind you, it's a backward and forward integrated company. Tata's, from chemical to fertilizers to steel to even power. So, it's a back and forth integrated company. So I think that, Tata Motors technically left a gap. That's why this came back. But I am very confident that this stock can go up to 490, 500. Keep on holding Tata Motors is the call. The other stock is BPCL. Now, it started moving up because we saw that crude was correcting. But lately, crude, we see that, there's some kind of a spike. But my sense is that eventually crude would be settling somewhere between $75 and $80. So BPCL, HPCL, rather, all the OMCs should do well in the longer term. But yes, keep a stop loss of 310 if you are a short-term investor. But if you're in the long term, I don't see any problem in BPCL.
Okay, no problem with both of these investments if you are looking at a longer term perspective. Rajat, your call on these, how are the technicals looking on both Tata Motors as well as BPCL? BPCL, like we were pointing out, he is sitting on quite a loss.
BPCL is one company where most of the people, they get into it at a high price, looking at it that it is moving up. But each time over the last 20 years, it has disappointed on most occasions. There are some phases when BPCL, HPCL, the oil refineries, they did do well and they had been on a trending period, but mostly they are a disappointment. So in my view, I would say that BPCL exit on rallies. And that's the call from my side. But Tata Motors, I'm quite in agreement with Vijay. I would say that, my technical buy call is bolstered by what Sonia said in your earlier program, that Mahindra CIE management is upbeat because Mahindra, Tata Motors, they are also very upbeat. So the clientele is upbeat there. That's why the Mahindra CIE management was upbeat. So in that case, if a supplier can be so upbeat because the Tata Motors and other companies are doing pretty well, so in that case, I would say that use the price band between 425 and 400 to get into Tata Motors, put a stop loss below 380. If there is a decisive close below 380, then only it becomes really bearish. Otherwise, there is every possibility that Tata Motors might do well. So Tata Motors are buy, BPCL, exit on rallies.
All right, buy. You can continue to hold Tata Motors, but exit BPCL on rallies. Rajat, I'm glad you mentioned Mahindra CIE. No coincidence, it is one of the callers that we have today as well. In fact, today the stock is up over 11%, right? So it's done very well. This is after the conference call that they held. So let me get in your thoughts here as well. We have NR Lakum, who has written in with a query. He says he wants to buy 500 shares of Mahindra CIE. He says he's a long-term investor and he wants to know the future prospects of the company as well. Rajat, since you were mentioning it, I'll come to you first on this. It's up 130% in 1 year at the high point. Do you think this is still a good entry point? Is there significant upside from here?
Pavitra, now you have put me in a spot because this stock has been rising over the last 1 year. It has trebled, almost 3 times now.
Yeah.
So it was around 150 and now it is 433. And today itself, it has moved up by, I think, around 40 points or even more, perhaps 45 points. So I would definitely suggest that I have seen such one-day big rallies in Mahindra CIEs. You wait a bit, maybe you would get it at a better price. And if you are a long-term investor, don't worry, you will get your chances. But this stock definitely should be in one's portfolio. it's going great guns. Fundamentals are supporting it. Long-term uptrend, medium-term uptrend, and short-term is all guns blazing. So
maybe
just
a buy
wait
on
for
dips
it.
here.
Yeah.
All right, Vijay, I have to ask you about Mahindra CIE as well. I'm sure you saw the highlights of the conference call that we've been talking about. The stock has been doing very well as well. The question is, how much more can it do from here? And at these levels, is it still attractive?
Well, if you ask me, I don't think that it's very attractive at these levels. It has given a wonderful return.
Yeah.
But yes, exit on rallies is the call. Probably it might go to even 450. But if you want to be in this space only, there are players like Sundaram Clayton. This stock I've been following, and we have also recommended to our clients. So Sundaram Clayton also looks very good on the technical and the fundamental side. And I'm supremely confident that the stock has the potential of going up to 5,500, 5,600. So you can probably flip from Mahindra CIE to another quality company, Sundaram Clayton, which belongs to the TVS group. And generally, the stock has done well over a period of time, and it has a wonderful management as well. So Sundaram Clayton is the call. If somebody wants to flip from Mahindra CIE to Sundaram Clayton, you stay in the same industry and another quality company.
Okay, the question was actually, should you buy into Mahindra CIE at this point? But I'm glad, yeah.
I would not recommend a buy. Pavitra,
Yeah.
I would not recommend a buy.
Yeah, no, I get that. Both of you are saying exactly that it's run up way too much already, for it to still be attractive at these levels. Maybe if there's some kind of dip that is offered, then it might be more attractive. But I'm glad you gave an alternative as well from the same space. The next query coming in is from Naveen Kumar Raju, who writes to us from Bengaluru. He holds 250 shares of Bharat Dynamics at 876 per share. He's a medium-term investor, and he wants to know whether he should hold or sell this stock. Bharat Dynamics currently around 950 rupees. Vijay, take us through your call on not just Bharat Dynamics, but defense as a space. And if you think that there are better opportunities, of course, a lot of these stocks have run up very fast. It's a 135% move on Bharat Dynamics itself that we've seen in 1 year.
Yes, so I think that this stock, the company is good. It has a good order book as well. And the kind of focus the government has on defense and in making India a defense hub. So BDL has, this vision of the country is aligned with the vision of the organization. So I think that this is a good stock, can go up to 1,050. But if you ask me about the sector, I think that there are certain laggards. I think BEML is one company which I like. BEL is another company which I like. Both these companies are wonderful. And, they are into defense. And I think that they have a very good potential to go up. So even BDL from here can give you another 100 odd rupees. But, if you ask me for certain options, I think the BEL, BEML also give you good opportunities. These are good buying prices for, the good entry points in this stock.
Okay, that's very helpful on the defense space. Rajat, quickly, your call as well on Bharat Dynamics. It has done well. But the question is, do you see this up move sort of extending itself?
Now I see some kind of a distribution. At least, I mean, it's a great company, but a great company need not be a great stock, because a great company becomes a great stock if you buy at a real good price. I mean, you are not overpaying it. But at the moment, I suppose the quarterly results are through, the conference call, your interview with the MD, all that is true, and there is no fresh gumption I can see on the chart. So I would suggest that buy Bharat Dynamics, but at a lower level, maybe 900 or lower, and keep a stop loss around 800. That would be the best thing to do. But my suggestion is look at data patterns in the defense space. That could be a good stock. Even Hindustan Aeronautics could be another good bet. What Vijay mentioned also, among them, I like BEL, Bharat Electronics. So at the moment, avoid BDL, let it come down. Meanwhile, you can actually look forward to stocks like Data Patterns, which is already correcting. If you get it around 1100, nothing like it.
All right, that is the call on Bharat Dynamics and what you could move to instead. Rajat, Vijay, I request you to stay on. We do have to take a short break. By the way, the market is really seeing losses extend right now. It's a 70-point cut that we are seeing on the Nifty. So currently at 17,445. The Nifty Bank has also slipped further, 130 points lower. And check out the metal index. It is down over 3% today. It's a 6.5% kind of cut that we've seen for the 5-point cut that we have on the Nifty right now. So definitely keep your eye out on the market. It is 150 points low on the Nifty Bank as well. We're just around 70 points away from that budget day low that we have been talking about. But let me quickly try to squeeze in some more queries before we have to wrap up the show. We still have Rajat Bose and Vijay Chopra with us to help us out today. The next query that's coming in is from Madhusudan Soni, who writes to us from Chennai. He has 15 shares of Coforge, which he bought at 4,300. He says he's a medium-term investor and he wants to know what he should do. Should he hold on? Should he sell? Vijay, let me come to you on Coforge first. He has made a little bit of a profit over here, but your call on this one, and would you suggest moving to anything else if not Coforge?
Well, I think, as I said earlier, that if at all you want to be nowadays in the IT space, be with the top-ranked companies. But still, I think that Coforge technically can inch up to about 4,600, 4,650, and there you can exit. And it has some steam left. So I think that, he should hold on to. And once he exits this, he should get into an NFI or a TCS if he wants to be in the IT space.
Okay, very clearly from Vijay, you should just stick with the blue chip tech companies right now. Rajat, your call on this one, it has done quite well this year, right? It's up 11% so far. Do you think this up move will continue?
From a technical point of view, if you look at the charts, I think Coforge chart is slightly better than, say, Infosys or TCS at the moment. Because Coforge is still maintaining its short-term uptrend while others are falling. I personally hold Infi, but that chart is not showing me as much traction as maybe Coforge is showing at the moment. But I definitely do agree with Vijay that around 4,600, there could be more supply. So at that level, if the investor exits it, if he is already invested, otherwise, if it were to fall, then only buy it, don't buy at current levels, because it is already into the resistance zone. And that resistance zone is from, say, about 4,250 to about 4,500.
Okay, got it. That is on Coforge. One final query on the show. We have a caller actually joining us now. Radhakrishnan V calls us from Chennai with a query. He has investments in multiple stocks, so in Petronet LNG, he has Power Grid as well as Hindustan Unilever. So, Mr. Radhakrishnan, if you can hear me, please do go ahead and ask us your query. We have both of our guests on the line as well.
Thank you, Pavitra. My query is to Rajat Bose regarding Petronet, which has come up today from my purchase price.
Yes.
And Power Grid, which has fallen, and Hindustan Unilever, which is very much down.
Okay, so
I want a six months to 1 year view on the same, whether Hindustan Unilever is contrary to the market performance or it is in sync with the market performance. I wish to know from Rajat. Thank you.
Okay, you're comfortable holding on for 6 months. Rajat, you do have the stocks that he mentioned, Petronet, LNG, Power Grid, HUL. If you could take us through your call on all of these, he's only wanting to hold this for 6 months.
Well, I would say first about Hindustan Unilever. This is one stock, if you are actually planning to hold it for the next 5 years, which he is not, in that case, he should exit this stock, or if he is planning to buy, then he should wait. Hindustan Unilever is clearly on a downtrend, at least in the short term. It has got some momentum on the downside, so it might come down even further. Petronet LNG, it needs to take out 230 or it falls below 208. It is a range-bound counter. I don't think he should get into it. And if he is already there, I would say sell on rallies should be your strategy. And I don't track Power Grid, so I refrain from commenting on that.
All right, Mr. Radhakrishna, I hope that helps you with your query on these stocks. And with that, we're also going to wind down on this edition of the show. Rajat, Vijay, as always, thank you very much for taking out the time and speaking to us and helping all of our viewers with their queries. The markets are not looking good right now, 75 points lower on the Nifty. So let's see how the last hour of trade for this week shapes up. It is a 2.9% cut on the Nifty for the week so far.